arts and creative businesses is not an easy path, it's not paved with gold, so it's good to remind yourself about why you're doing it. That's about where you can capture some of your personal passion, but also about some of the changes that you might want to make. It might be a change that the one-to-one person that you're dealing with in your business, the change you affect in them, or it might be actually much broader than that. It might be about changing society or the world. I mean, that sounds very grand, but that is a lot of the reason why a lot of artists become artists. What do you do? Do you provide a service? Do you make a tangible product that you sell? Do you sell that online, or do you sell that practically? Do you work with is it all about collaboration? Do you work with other people, always? Or do you work on your own? And actually, how can you separate those two things out a little bit? Think why you're doing it is the most important thing, and the governance structure rolls out of that. I can't stress how important business planning is before you commit yourself to a governance structure. Even for me, it conjures up like a big, thick document, financial plans and fundraising plans and marketing strategies. And at one point, it is that. But there's a little bit of thinking that you can do that's much more loose at the beginning, which I think will be really helpful before you decide on your governance structure. And it really is about those three questions, really. Where you are now, where you want to be, and how you're going to get there. And if you think about your business plan in the first instinct is that, then it becomes a lot more attractive and doable. It's a journey, not a destination, because it will evolve from this thing that's like a creative mind map into something that is this big, thick document, which has real sort of detailed steps and plans. But don't be put off by the phrase business planning. Who makes the decisions and who carries out the activity is quite a good way of thinking about it. So if that's just you, then that's good. If you work with a group of people, how does that work? What are your values? Is it because you want to make a change in the world? Is it just because you want to create a high quality product? They've got very different values attached to them. Do you want to do it to make loads of money? That's the sort of stuff that you want to sort of capture in this. So, who's been taking part? Who's been paying? It's an arts business, so where does the money come from? Is that a funder? Is that clients and customers? Are there participants? Is there a community group you work for? Just sort of map out all of those different stakeholders. Where do I want to be in 6 months' time? Where do I want to be in 3 years' time? And then always, where do I want to be in 5 years' time? Think about the big picture as well. Who benefits? Is it about, actually, I want to make lots of money and I want to be the one that benefits from that? But also I want to make sure that people have a good quality product? Or is it about, I want to work with disadvantaged young people and I want to give them a better start in life through my sort of creative process? And then what is the change you want to make? So that's that thing about impact and how you're affecting the beneficiaries. In terms of thinking about what the different governance structures are, but these are the things that I've pulled out that I think are actually affect the choices you make between the different structures. Your identity and how you are viewed by others, the resources support you need, the level of risk you want to be exposed to, the level of control you want to have, the level of flexibility you need, and the resources capacity you have. What structure you choose says something about your values. What sort of company do I want to be? Have a think about what networks you might want to join. What sort of structures do they tend to have, and how do they see you? Successful business organisation is built on trust between you and your stakeholders and partners. So what structure will they trust more? What you want to do is back to that sort of thinking about your emerging business plan, really. You want to capture all this information. So you're going to have to go on a bit of a journey about researching where the money's coming from, and just capture all of that, because that will be what you build on to create your business plan and your successful business. Broadly, you have the lottery distributors, so that's, I'm sure you're familiar with all of those, but Arts Council of England, Heritage Lottery Fund, British Film Institute, and Awards for All, local authorities, and trusts and foundations. There's a really good list actually on the Arts Council website saying further funding information, which lists a lot of those. Every arts organisation that I've ever known operates in a mixed economy, doesn't rely on just one source of funding. So you're never just going to be looking at one, you're going to be ploughing across these different pathways. So private individuals, that can be earned income, that can through the sales of goods or services, that can be buying tickets, that can be through private donations. Private contracts, just subcontracting sales, just working for someone being employed either as an individual or as a business. Open tenders and competitions, like arts jobs when they advertise sort of commissions, that might be an appropriate thing for you to apply for a fixed term opportunity. Community groups, voluntary groups and social enterprises, obviously, a lot of community groups use arts as a form of their engagement or activity, so there might be opportunities in terms of that. Schools and colleges are the same. Loans and equity operate for both social enterprises and for private businesses. You have different banks that serve charities and different banks that serve private businesses. So, all the structures sort of line up between whichever choice you make, which is why it's an important decision, what governance structure you make, because it does, like I say, open up some opportunities and close others. Same with equity. Equity is something that you would normally associate, I suppose, with private, for-profit businesses, Dragon's Den style, but actually, increasingly, equity. There's lots of equity schemes for social enterprise that look at your networks, see which ones you want to be a member of, do your research, find out what they offer. You apply for your membership, and with AN, you can then buy really discounted public liability insurance because you're a member. So there's real benefits to be had from some of these membership organisations, and there are lots out there. You just have to choose which one's right for what you want to do. Depending on where you're at, there's lots of different flexible options out there. There's hot desking. Most people work from home, don't they? But also what assets you need to run your business. Thinking about contracts, what's your relationship with other people going to be like? Are you going to be just collaborating with someone? Is it going to be a formal sort of contracting with someone? Are you going to employ people, or are you likely to? And also how you're going to manage volunteers as well. That needs resources. And the greater the risk, the greater the benefit, usually. So not always, sometimes. To think about them as both threats and opportunities in terms of your risk planning. So don't just think about the negative. And then once you've got your list of threats and your list of opportunities, then it's a little bit of process of thinking about what they are, what the impact of them is going to be. You're really just thinking about, okay, what are the potential risks, threats and opportunities, and how might they affect how I go about my business. Once you, again, start building your bigger business plan, then you start thinking about how you're going to make the most of them or avoid them or share them, or all the other sort of principles of risk management. You need to weigh up the pros and cons of the personal liability, limited liability, and how much you'll spread risk. Flexibility also in terms of being able to sort of expand or retract depending on what the opportunities are as well. So that's back to that thinking about people and about whether you're going to be subcontracted with other people or whether you're going to be employing people, or whether actually you want to be able to move to a different sort of structure because different opportunities come along. How defined what it is you want to do is, whether it's charitable objectives which are narrow, or if it's business objectives which tend to be a bit broader, a bit more open to interpretation. The resource and capacity you have to do the activity you want to do the art bit of it, but it's also about what are you going to need to learn or who you're going to have to work with to get to where you want to be in 6 months, 3 years, 5 years. Different structures require different levels of reporting, accountability. The more complex the structure, the more that takes up of your time, basically. Right, if you're self-employed, but you don't operate within a structure, because you can be self-employed and you can operate within a structure, just to make things really confusing. But in terms of governing documents, that's when you're actually setting up an organisation, either yourself or a group of you are setting up an organisation, and you'll have a governing document. And they're called slightly different things for different structures. So constitution for unincorporated associations, trust deed or will, memorandum of association, and memorandum and articles of association, memonarts, some lawyers call it memonarts, a CIO, foundation or association constitution for CICs, but also actually memonarts, CIC as well, because it's actually a company, and partnership agreement as well. Thing to reassure you is you're not writing this stuff from scratch. There are models out there. You do need to think about these questions, which is why you're there, what the purpose is. It's called objects in law. Who is involved in that, whether it's just the members or whether it's the public or whether it's a specific group of people that are involved in it. Who benefits. That's particularly relevant, obviously, for charitable organisations. Sometimes it has a geographic area, sometimes it doesn't. Sometimes it's just like, the UK or something. And again, that's where we start getting into like legal frameworks. And then all the rest of them are about sort of administrative requirements of your organisation, of actually running your organisation, the administration to do with that, how you make decisions, how you run meetings, how you end the organisation, and they're all embedded, they're all, in terms of your governance structure, they're all embedded in law. If you are going to be a charitable organisation of any sort, then you have to describe how you meet one or more than one of those. You don't get more points for meeting more, you just have to meet one really well. The second thing you need to demonstrate is this public benefit as well. The way that the Charity Commission defines public benefit is must be beneficial to the public, or anything that's any detriment or harm must not outweigh the benefits. Must benefit the public in general. It must not give rise to more of an incidental personal benefit. That's quite important if you think about it. So that's about, when you've defined at that beginning, when you were just saying, who's going to benefit? Actually me, I'm going to keep all the profits. That means that you wouldn't be able to go for a charitable structure. So you have to be thinking about public benefit, not your own benefit or the benefits of your members. Here are the advantages. Public recognition and trust, that back to that values, you're recognised as that, your peers recognise you as a charity, your stakeholders recognise those values that you have enshrined in the way that you conduct your business. More practically, you get a lock on assets. So again, that's sort of related to trust really. So I've got a picture there of the Brighton Open Air Theatre, which I'm a trustee of. That's how it looks just now at the moment. It's not quite ready. Because we're a charity and that we've signed the lease for that on behalf of the charity, that is forever enshrined for public benefit. Charities do qualify. The reason that they're quite sort of strict about you demonstrating it is because you do qualify for tax relief. You can be exempt from VAT. You don't have to pay corporation tax, depending if you're a charity doing a lot of commercial, what they define as commercial activity, then actually you do have to pay corporation tax, which is why you see a lot of things like charities setting up companies as a trading arm to do sort of run their bar or cafe is the most obvious one, I suppose, to think, because that gives them the freedom to run that bit of the business in a certain way. But what they'd have is they'd have that business either a company limited by guarantee, or it will be actually a company limited by shares, but all the shares will be owned by the charity. So that's another sort of confusing aspect. And funding. You can apply for lots more funding. Trusts and foundations, a lot are restricted to charitable organisations. Disadvantages, you're restricted on what you can do. You have to have those narrow objects. It has to be for the advancement of education or arts and culture, and you have to demonstrate public benefit. And you will be held accountable on that as well on an annual basis. Administrative requirements, you have to keep, again, it's whatever you put in your governing document, but on the whole, it's you have to keep all minutes of all your meetings, every decision made, who was there, there has to be, and that has to be available as a sort of a record that could be made public if you're asked to. And an unpaid board. I've put usually because actually I always just assumed it was an unpaid board, but technically that's not defined in law. But I've never come across a charitable organisation, except for a CIC, where the directors are paid. I think you can do it, but you have to make a really strong case. The Charity Commission have to approve that. They will look through all your accounts and your businesses and work out why. They will expect to see a sort of conflict of interest, consideration in your governing document about how you've made that decision, that one of the directors is getting paid for a service. Why is that director getting paid? Why is that not someone else? So sole trader, simple to set up. It's not a separate legal entity at all, so you just basically register for self-assessment. It's as simple as that. Problems with that in terms of your external relationships, it may put off some suppliers. You may not be eligible for some funding. Arts Council is an anomaly in this because actually they do fund individual artists, so you might want to consider that. Actually, if you're an individual artist, then why go into the complications of a structure? It's not going to sort of stop you working with the Arts Council. It's not going to stop you working with your customers. It's worth thinking about. You're personally liable for anything that you've signed up to in that contract. You get to make all the decisions. You don't have to define to anyone what it is that you're set up to do. It doesn't matter. Taxman doesn't care. You're not held to account on those. You can do your own accounts. It's a membership organisation that comes together for a shared aim. It's simple to set up. You can download a constitution. Because there's no regulator, that means that actually you're still a bunch of individuals coming together with a shared aim. You haven't got a separate legal entity. You can't sign into contracts. Your liability isn't limited in any way. Control, where you make the collective decision, that's going to be either easy or difficult depending on the people you get around the table. And the same is true for everything we talk about groups. you know, but also your constitution that you have will set out how you make your decisions. So you'll still have to follow that process. We're back to that, what a governing document's about now. If your turnover is more than 5,000, then actually you do have to register with the Charity Commission. And so you might as well, if you're going to do that, become a bit more of a formal organisation, really, because you have to do the same level of accounting. And usually, like for the council's arts partnership grants, you have to show that that you've got a community bank account. So you need to have a bank account with 2 signatories, just to show that there's no individual benefiting from it. The Arts Council will allow you to apply as an individual, but local authority won't. You can have something as simple as this, but you have to have a bank account with 2 signatories. When you do your research into different funding bodies, a lot of them will say that you must have some level of match funding. You know, they don't want to fund it just on their own because the risk is too great. So you need to think about where you can get the rest of that money to pay for your project. So this funding scheme is created to provide you with that 10%, as long as you're an unincorporated association or an organisation. You can't do it as an individual. So the idea is that basically you apply to the Arts Council, you include the City Council application as applied for in your budget, and then you apply to us at the same time. And the Arts Partnership form is really simple. It's just a covering letter, sits on top of your Arts Council application. You send it in with your constitution, which can just be the simple thing that you download off the Resource Centre website, as long as you've got your bank account for 2 signatories. And then that goes into a process and it gets assessed and a decision gets made. But you need to think about, when you write your Arts Council application, about pulling out the sort of public benefit or to put a sort of covering letter. They are funded by their council taxpayers. So you want to think, okay, they're going to care about council taxpayers and how they benefit. So what funders want to know is they want you to sort of say back to them why they should fund your project. Again, it's a relatively simple structure. You have your members don't benefit, they are trustees. It's usually set up to manage money or property. But it's not a separate legal entity, interestingly. So the trustees are still personally liable. It's more difficult to scale up, I've said, but it's easier to convert. So actually, you don't want to have a really unwieldy charitable trust with all of these individuals that have all got their own sort of separate opinion. Partnerships, this is a bit of a fudgy one. It's because actually, I've not come across too many of those in the arts, actually, which is strange when you think about it. So what I'm talking about here is a formal partnership as recognised in law and tax purposes. So it's exactly the same process for setting up a company, but there are 2 different sorts of companies. There's one limited by shares and there's one limited by guarantee. The company limited by guarantee is the charitable company, and the company limited by shares is the one that distributes its profits to its shareholders. So even though the process of setting it up the same, the forms look very similar except for those things about charitable objectives. These are the really key bits that you need to think about what sort of company is right for you. But they've got different governing documents slightly. It's the same sort of process and you have to keep the same sort of records, except for you have to demonstrate these things. So you have to have somewhere in your governing document for a company limited by guarantee, you have to deal with these 3 points. So you have to be explicit about how the people who are making the decisions about how the money is spent are different from the people who are benefiting from the money. You're not eligible for some funding. You can enter into contracts, buy property and assets in your own right. Your liability is limited by the value of your shares. The gov.uk website, which I must say is fantastic. You know, it's just simple, you know, to follow through. It asks you questions and you just sort of put yes or no, and it takes you on the journey to set up your company. The Charity Commission are really difficult. I found them very particular, very difficult to deal with, and I think that is because of the tax benefits you get. So they suspect that it's a tax loophole, so they test you. You know, they really want to find out more and more and sort of dig away to find out why you're a charitable organisation. And actually, in the same way that charitable trusts are falling out of fashion in terms of like legal structures, so a company limited by guarantee. And if you go to a lawyer now, as I did for both my private company and for the charity, they'll push you towards the other 2 structures, the last 2 that I've got here. So these are relatively new structures, but this is about trying to sort of deal with that whole sort of mismatch between the trustees and benefits and who can get paid and who can't get paid. You're a limited liability, you can enter into contracts, you can purchase assets, remembering of course that any of the assets that you buy are being purchased on behalf of public benefit, so you'd have to have some sort of clause in your governing document, back to that, which says about what you're going to do with your assets if you dissolve as a charitable incorporated organisation. Directors tend to be hands-off, which is back to that being paid thing, you know. So actually it's about that separation between the people who make the decision and the people doing. You know, so this is based on that sort of assumption that those two things are distinct. Of course, in reality, especially when you're setting one up, is you do all the work and you don't get paid for it. Decision making, again, lay down in your governance document. It depends on who you've got around the table and what processes you've got up. You can scale up. You can, employ people or not employ people. You can subcontract. You can do, because you're a legal entity, you can do all of that stuff. You know. But you have much narrower objects. The reason that all of us are in the arts business is because actually we do believe in something around benefit and public benefit and change. I think those three, the ones to think about personally, I would say CICs, CIOs and company limited by shares are the three sort of ones that I think are most useful, and they've all got pros and cons depending on what you want to do.